Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today's guest is Jared Beck, and he's co founder and managing director over at Risk Management Advisors. Jared, welcome to the show.
Adam, thanks for having me. Been looking forward to it. Excited to be on.
All right, man. So we got a great topic on our hands today. So turning risk into profit through captive insurance companies. I know many of our listeners maybe have heard of what captive insurance companies are, but does anybody really know how they work, how they operate? What's the point in turning that risk into profit, and how do you do it, right? So we're going to get into all of those things and more. But before we do, we're going to start this episode, Jared, the way that we start them all, with what we like to call our Mission Matters Minute. So Jared, at Mission Matters, our aim and our goal is to amplify stories for entrepreneurs, executives, and experts. That's our mission. Jared, what mission matters to you?
Yeah, Adam, the mission that matters to me, at least with respect to business, is really educating business owners and entrepreneurs that, the status quo doesn't have to be, what they get stuck with or subscribe to. So our whole business model was built around, figuring out how to, take something that seemed inherently unfair, to the broader market and turn it on its head and come up with a more creative way to do things. So that's what inspired us back in 2020 or 2004. And that's still what keeps us going today.
Amazing. Love bringing mission-based individuals on the line to share, why they do what they do, how they're doing it, and what we can learn from that so that we all grow together. So great having you on. And I guess just to start, peeling back the layers in this onion here, let's just start from the beginning. So how did you kind of fall into this niche? Let's set the table there. Like, where did that come for you?
Yeah, so I started my career as a financial advisor. So it was retirement planning, investment planning, and quickly found that I preferred working on the business owner side of the table. So it was defined benefit plans, welfare benefit trusts, non-qualified deferred comp corporate strategies to help business owners save money on taxes and protect assets. And it was in the course of doing this work that we stumbled upon captive insurance companies. And we actually lost a deal. We were proposing one structure, and the attorney leans over. He says, "Hey, this is all well and good, but why don't you just fund more money into your captive?" And the owner looked at us. He's like, "Hey, thanks for all this, boys. I'm gonna do what he just said." And we're like, "What?" We were like, our jaws hit the table. We're like, "What's a captive?" So we got out. We start researching. And again, that's what we were always looking for, the creative ideas, to cloud business against bigger competitors. And, we discovered captives and said, wow, what an awesome tool. And we decided to make that, me and my partner, we decided to make that the focus of our practice and our careers. So we started Risk Management Advisors to, basically design, implement, and help people with captive insurance companies.
Let's start there. So captive insurance companies, again, many have heard maybe of them, but maybe don't know exactly what they are. Like give us some insight there. What is a captive insurance company?
Yeah, captive, it's one of those concepts, kind of like maybe, for the poker players in the audience, it's, easy to learn, but a lifetime to master. Right. So you understand what it is at a base level, but then all the different permutations, depending on industry or whatever, a lot of different rabbit holes you can go down. But in its simplest form, a captive is an insurance company that a business sets up to insure their own risks. So it's a formalized version. People will say, like self-insurance. It's a formalized version where you're going out, you're setting up a separate company and then getting it licensed to issue insurance policies. And there's a couple different motivating factors for doing that. The perhaps obvious one is, for businesses that are, paying large amounts of insurance premium, but then they have really, really good losses. They're paying these dollars out and none of it's coming back to them. So with the captive model, you're setting up your own insurance company. You go out and you buy reinsurance. which is, insurance for insurance companies to
Mhm.
protect yourself from anything catastrophic. And then you're keeping that difference, bringing that money back down to your balance sheet, to your bottom
Mm.
line, which, for the right business, right line of coverage,
Mm.
very profitable.
And
then,
so if we're and just to break that concept down, I don't want to assume that everybody caught that. So just high level, and I know there's going to be variations there, right? But that being said, the basic concept, I just want to make sure I got it. So you have a company, you're already maybe paying out, X amount every year in claims or other things, and you have this money going out, but your premium and like whatever you're paying for that, like that's just gone. Like your money's gone there. But with a captive insurance company, the reason you would set that up is because now there's a potential for you to keep the difference, which could be the difference between what you're paying for in reassurance and then what you're funding it with. Am I off on any of that? I just want to make sure we have some of that nuance there.
no, that's correct. Yeah. So I'll give you a quick example.
Yeah.
So, and this is one of my favorite stories because, we're out at a conference in Arizona. And we're sitting there, and my sales guy comes over and he's like, "Hey, I met somebody from New York." And it was a CFO from a construction company in New York. And he was paying $5 million a year for his liability and his business insurance.
Yeah.
And he was dying, not his brokers, not the other brokers. Nobody could bring him a solution on how to save on that spend. So he ends up all the way out cross country at our conference in Arizona. And, I sit down, I was like, well, let me show you. And this was, 2012, but, so we sketched it out, and, long story short, they now take the first $1 million of any claim, that comes down the road, which sounds like a lot, but, it's on a $5 million spend.
Yeah.
Well, that lowered, instead of paying the 5 million, now their reinsurance is only $1 million. And then their claims are about $1 million per year.
Yeah.
So now you do the math, there's anywhere between $2 and $3 million of savings per year.
That's amazing.
Right. And then so you compound that since 2012, and you're talking about some really, really, really big numbers.
Yeah.
And to compound on that fact, so one, there's the underwriting profit component of it, but then it's also the financial efficiency of the way insurance companies are taxed. So in your business or my business, if we, save or make an extra $3 million, that immediately flows down to our bottom line and we pay taxes on it. In the insurance company, we can put that into reserves to pay potential claims. And then now it grows tax deferred. Right. And you don't need to be a finance major to know the difference between the benefits of, investing pre-tax versus after tax.
Yeah.
So, when done correct, more money in your pocket, but then it's also a more financially efficient way to, to grow those dollars.
That's a great example. And what it shows is kind of like the impact that it can make by going this route. I'm curious on like size of companies and otherwise. You mentioned, I think that you're paying out about 5 million a year, which what is it based off of the amount of claims per year? Is it based on the size of the company, the number of employees? I'm sure there's going to be variations, but as somebody's watching this interview or listening to it as they're driving in their car and they're thinking about, hey, does this relate to me? Like, give me some of the who it relates to.
Yeah. So I gave an example, which is, probably on the mid tier of, what would make sense, but it can come way down from there. So I would say rule of thumb, for a business that's paying, $750,000, 750,000 for their insurance program. There's programs and structures out there that would work. Maybe we'll get into it in a little bit, but amazing things happening on the group medical side. Health insurance cost is something that, you hear about in the news, and, certainly business owners are concerned about. And, there's solutions there for companies with as few as, 100 employees. So we're not talking, it doesn't have to be a mega company like it used to be.
Yeah.
These are all solutions, middle market, entrepreneurial, family-owned businesses are the types of groups that we're helping.
And what about in industry? Industry, is that agnostic, or you mentioned construction, or is there, some versus others that make sense?
Yeah, it's not industry agnostic entirely. That'll just dictate where the pain points are.
Mm.
So if you have, a company with just a lot of employees,
Yeah.
the health insurance is going to add up. It doesn't matter what industry you're in.
Yep.
If you got 1,000 employees and they're all on your health insurance, it's probably a $10 million spend right there.
Mm.
If you're a staffing company or somebody with a lot of payroll, then workers' comp might be your pain point.
Mm.
If you're swinging hammers or driving trucks, then it's going to be your liability, your auto. So it's the industry kind of dictates where the pain points are, and then whether it makes sense or not based on the size. And then, you mentioned claims, obviously, you want somebody with, low claims.
Yeah. What you mentioned something happening in the group healthcare side. Well, what's happening there? Like what's going on in that?
Yeah. So, I mean, if you go back and look, since all the major health insurance companies, there's like 5 of them, right? And PPOs and HMOs are the types of plans that they offer. And, that's been the popular model for, let's just say the last, 20, 25 years.
Mm.
And since those models came into effect, the cost of healthcare and the cost of health insurance has just, you wish you would have invested in you wish you could have investment.
Let's say it's not going down.
Yeah. I mean, it's a hockey, it's a hockey stick like trajectory.
Unfortunately. Yeah.
And what companies or businesses don't realize is, they've delegated this big spend, this big line item on their P&L. They've delegated it to these insurance companies who don't have their best interests at heart, right? They answer to their shareholders.
Yeah.
Right. So they're happy to.
And do you think that is because people just don't know, or it's status quo, or it's like, what do you think that is? Like, why do you think that is? Is it because we don't talk about it often enough? Like, what have you found?
Yeah, it's status quo and it's black box, right? So the health insurance companies,
it's hard to shop around. It's hard to it's like complicated.
Hard to shop around, and then they black box you off from your data. They just tell you like, oh, your claims were really bad, or everybody else's claims were really bad. Either way, we got to charge you more. We're losing money. But then you go to their financials and they're actually making quite a bit of money.
Yeah.
So they're messaging it
black box too is like privacy and like all these other things, right? Like
they'll hide behind HIPAA or state laws and just say, hey, we don't have to give you your data. And it just made it really challenging to, it was really only the biggest companies that could afford to kind of break that model open and try to do it themselves. But again, now, it's, there's strategies available for, smaller companies. And the problem has become so profound. I mean, after payroll, a lot of times the next biggest line item is the health insurance, is the group medical spend. And, if you're a CFO trying to budget and you've got, 10 to 30 to 40 to 50% increases every year, then how do you account for that? So that's been a big focus of ours, is sitting down and saying, hey, it doesn't have to be this way. Especially with, all the data tools that are out there. I mean, if you can get somebody out of a traditional model, get them into a captive structure, there's tons of reinsurers out there that'll backstop the risk. And then you get access to that data, and you can, cleave out all the waste. I mean, 30, 35% savings are possible. And I used to be reluctant when we first started implementing these strategies. I was like, man, that's a big number I was reluctant to say that.
Yeah.
But, now.
But you've seen it time and time again. So.
Yeah, proof's in the pudding. I mean, I've got the receipts on all these, these groups we've helped. And it's not just 1 year, it's sustainable.
Yeah.
And it's just, we talked about it earlier, like, hey, why are we still excited to do this? It's, the people that, that are open to seeing things a different way. And then, say, let's do this. And then having that success together is awesome.
Do you see as these plans become more available and they're improved and there's more opportunity there? Is this just in general the captive insurance industry as a whole? Is it on an uptick? Like as people become more aware, or is it like how would you just characterize the overall industry right now?
Yeah, huge uptick. So
Yeah.
you got
I
the
would
issue.
expect that because the more, and especially with social media and like you coming on shows like this to educate the public on it, like that kind of thing, it all matters.
Mm-hmm. And the market, I mean, we just talked about health insurance, which is
Yeah.
one of my passion spots to help people. But that's not the only difficult area. I mean, auto right now is very difficult, very expensive. Property, if you own a lot of properties, the cost increases there, the lack of coverage, it's very difficult. And then, liability lines too. So you've got the need, and there's, a lot of innovation going on, not just in the, health insurance side, but on the liability side. So, people, my peers coming up with solutions for other industries, other verticals. So it's, kind of need meeting, the willingness or the supply of ideas, and
for sure
demands all time high.
Talk to me about the process, like what it looks like for a new business owner comes into the the door and they're like, hey, I heard you're the guy. like where do you go from there?
Yeah, that's shifted over the years because like you said, most people, maybe they've heard of captives or somebody will mention it.
Yeah.
And so a lot of times they've come in, they've Googled it, they've done some research, and which is nice because now, when people arrive
the basis
at our
of the
doorstep,
conversation, you're not starting at scratch.
Yeah, we don't have to start it. This is what a captive is, right? So people kind of have a feel for it, and then it's like, all right, well, hey, what is your pain point? Why are you, why are we here? What is captive, or what is this hold for you? And we get into that conversation, what their goals are, and then we figure out if, kind of do some pre-qualifying to figure out if they're, if they're a fit, and if it's worth, taking a deeper look. And to the extent it is, we would, get some data, similar to if you're making a, submission to an insurance carrier, we would get the company data, revenue, number of employees, copies of the policies, et cetera. And then we do an analysis and say, if you set up a captive, this is, these are the different ways you could structure it, and this is what it would look like. And then that serves as a base for a more involved discussion about, go forward, don't go forward. Do we want to do this? Do we not want to do it? And then, to the extent they say, yeah, that looks great, let's do it, then we would set it up for them, help them manage it, and, and then kind of have the ongoing consulting aspect.
Now, in terms of the implementation side of things, now obviously this is going to change for size of business, what plan you're doing, as fast as they can implement or otherwise. But in general, if there is a general on this, like how long does it take to implement something?
It can vary, but the implementation now, the actual setup of the insurance company, that process has become well oiled. It's a used to be where that might take 3 months, 4 months.
Yeah.
Now that can be done in 4 to 6 weeks. So it's very, very organized. You have great relationships with the regulators that you're doing this with. Yeah. What tends to take the time is the strategy piece of it.
For sure.
In terms of, education, even if they're coming in having read some stuff, there's still a lot of education that goes on, as you can imagine, on how things work. And so, that's where it's always good to get the head start. So
for sure.
We get a lot of our business from other advisors and, brokers out there. They'll say, hey, our clients want captive. Yeah. And the worst thing that can happen is if their renewal is January 1st and they show up on December 1st.
Come on.
Hey, we want to look at captive. It's like, man, that's not going to happen. At least not this year. So, the best time, frankly, if somebody was looking, at something that renews on 1/1, the best time to start the discussion would be the summer now, and again, it's for that educational, runway, if you will.
Yeah. Well, Jared, I'll tell you, I know I'm much more educated on captives, how they work, the benefits of them. I know my audience is as well. I mean, what's next? What's next for you? What's next for the company? What's next with your plans?
Yeah, so it's interesting to look back. We started, it was me and my partner in a Jack and Jill office with, one assistant. And now we've got, I think there's, 50, 60 people on the team. We've
Man,
grown.
congrats, by the way. That's no easy feat. A lot of entrepreneurs that watch this, man. Congrats from one
Yeah,
entrepreneur to another. That's amazing.
no, thank you. And that was, frankly, that was the why early on,
Yeah.
was just to build something, show people, hey, I can, I always liked, enjoyed giving advice.
Yeah.
So that was, like I said, that changes over time a little bit, but yeah, I mean, we actually have different levels to the org chart now. That was interesting.
Isn't that the wildest thing?
Yeah, I was like, oh, this
Sometimes I look back and I'm like, where'd these people come from? What's going on?
That's right. That's right. Yeah.
In a good way, I mean, in a good way, I should say that.
Yeah, and then and it gives me new added respect for my clients that have again 500 or 300 or 1,000 employees.
Yeah,
Just,
yeah.
wow, it's insane. But and I think we've grown to fifth largest captive manager out there behind the large publicly traded companies. So our goal is to keep doing quality work and crawling up that list.
It's amazing. A great entrepreneurial story. Love to hear it. And then I also love, entrepreneurs helping other entrepreneurs, right? Like, so that when, somebody's working with you and your team, like they know like what type of company, what type of culture they're working with. So I think it's an amazing story.
Yeah. And if I could touch on that,
Yeah.
I mean, that is the cool thing. So, one, we've gotten to see all different types of businesses. Again, we're across industries here.
Mm-hmm.
And the appreciation for the different ways and the niches that people make money and grow businesses and is something that's been fascinating. But then you're right, it is also the ability to sit there and say, hey, I manage budgets. I've made we've had to make payroll.
I've been in your shoes.
Yeah, and I think that matters. So
yeah, I do too. It all matters. Jared, if somebody's listening or watching to this, and if they want to go check out Risk Management Advisors or to connect with you and your team, how do they do that?
Yeah, a lot of great content out there. So www.riskmgmtadvisors.com is the website. We've got a lot of ebooks, case studies, great educational material there. And also, check us out on YouTube. A lot of good video content. Good podcast conversations over the years, and then Facebook, LinkedIn, Instagram as well.
Amazing. And for everybody listening, just so you know, we'll put the website links and all that stuff in the show notes so that you can just click on them and head right on over. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe button. This is a daily show. Each and every day, we're bringing you new thought leaders, new ideas, new business owners, new founders. We don't want you to miss a thing. New ideas, the important one, and the important thing here, just understand for those of you out there that are thinking captives, otherwise, what is this talking about? That construction example, if you're dealing with large amounts of payout there, think about that. That's a real case study. So if you don't know what I'm talking about, rewind this one, listen to it again. You want to hear that. And Jared, again, thank you so much for coming on. This has really been a pleasure.
Hey, Adam, thank you for having me. I appreciate it.